Hi, and welcome back again to Tim Biggam's Options and Volatility newsletter. We'll take a look at some unusual option activity, also take a look at the market as the S&P hits an all-time high, the Nasdaq not too far behind, and also take a look at the VIX as we always do. So let's jump in and take a look, shall we? Here is my scanner on the Thinkorswim platform that I built. So Bloom Energy leading the charge today with unusual option activity with over 20,000 contracts trading that drove the implied volatility up. I always like to use implied volatility change as a big component of UOA to simply make it worthwhile if they haven't really moved the market too much with the buying, not nearly as important as if they did. So BE certainly has been charging higher lately here. Here's the actual trade. You can see over 21,000 of these longer term July 28 calls just slightly out of the money traded versus only 23 open interest. So the hallmark of unusual option activity from that perspective. Plus, if you look the prior day, looking at the slightly out of the money calls from the prior few days, you can see that the implied volatility was around 74, jumped to over 77 because of that big call buying today. And that's with the VIX, we'll take a look in a second, dropping. So even more aggressive buying. You'd normally expect implied volatility generally to fall in option prices, but in this case, because of that big call buying, it actually increased. Taking a look at the chart, you can see Bloom Energy making a run towards its highs here, right around that 28 level. So someone positioning for further upside in Bloom Energy. We shall see if that's the case. Stock getting a little bit overbought on a technical perspective on Bollinger percent B 9-day RSI, although MACD did just generate a buy signal, so should be interesting times indeed on that. On the S&P 500, another new closing high for the S&P as it closed over 6,100 for the first time. We can see that this has held this long term, as we talked about previously, uptrend line over the past year. Really no major breaks. This one, it basically closed at it. Here was Valma getting a brief break below, but this too getting a little overbought, over 70 on a 9-day RSI. MACD at a recent extreme. Bollinger percent B over 100. You can see implied volatility dropping as well here on the S&P. The Nasdaq 100 triple Qs still not quite at fresh new highs here. That kind of 539 level. We'll see if that is overhead resistance or not. So the S&P actually outperforming the Nasdaq recently, even with the big boys, the AI stocks leading the charge here. But again, Nvidia and the like, Microsoft, are in both the S&P and the Nasdaq 100, and two of the biggest weightings, right? Two of the biggest three weightings in those two indices. So certainly the Nasdaq and the S&P getting a little more correlated as well. Taking a look at the VIX, we see it closing at the lowest level of the year and the lowest since basically last Christmas, as it traded with a 14 handle close, basically right at the 15 level. That just means option prices getting cheap. We'll see if we have a meaningful move back towards, the lows going back here, right, to Christmas time, and make a move below 14 to make fresh new recent lows in the VIX. Entering into the, kind of teeth of earnings season with Apple, Microsoft, Amazon, and the like reporting coming up very shortly. So that, I think, will tell the tale. And as long as the 10-year yield remains somewhat behaved here in between 4.5% and 5%, I think the market's comfortable with that sort of interest rate environment. So until next time, as always, here's the good trading. Take care.